afternoon, ladies and gentlemen. I think we are in a better position to start from where we have left on cycle 2.4 CPD, the CPD that is still dealing with the users of financial statements. In this CPD, I think let us continue with chapter 5. We are making progress. Chapter 5, which deals with government and regulators, and also dealing with the members of the community, or okay, I just want to sort a few things out. Okay, so chapter 5 is dealing with the government and regulators. Then chapter 6 is dealing with customers and buyers. Then chapter 7, chapter 7 is gonna deal with customers and members of the public. Okay, I think what I ought to say was that let us recap on what we have done between chapter 5 and 6. Chapter 5 being the regulators there. All right, so importantly, we talked about 3 regulators. We talked about the South African Revenue Services, we talked about the CIPC, and we talked about the Department of Labor, and we looked at this into a much more finer detail. All right, so the things that we talked about there for SARS, we said first you must understand whether you are a juristic person as you are getting to register with SARS. A juristic person could either be a cooperative, a company, a closed corporation, a trust, or NPO, or an NPC. NPO and NPC, those are juristic companies, and those companies will file a return called an ITR 14. Okay, then if we go to the natural persons will be employed individuals, will be sole proprietors, and will be partnerships. Okay, so VAT doesn't matter. Once you register for VAT, it could either you are a cooperative, you are a company, you are a closed corporation, you are a trust, you are an NPO, you are an NPC, you are an employed individual, you are a sole proprietor, you are a partnership. Okay, then we went on to say let us talk about the taxes related to employees. If you are a company and you have employed employees in your company, you either a closed cooperative, whether it's a primary, tertiary, or secondary cooperative companies, that is the PTY Ltd, the incorporations, the NPCs, then closed corporations, trust, NPOs, and if you are a sole proprietor or an employed individual or a partnership, you all have to register for what we call employees tax, where you're gonna close an EMP 201 and an EMP 501. With the ITR 12 and ITR 14, these are closed during the tax season. The tax season would normally start at in July each year. Okay, so once you are registered for VAT, look at your VAT period, your liability period, which will tell you the dates in which you are required to submit your VAT information to SARS. Normally, it's they've got different categories in which you can register for VAT. So look at your category and see the submission deadlines there. Okay, then if you have registered also employees for EMP 201, EMP 201 is closed on or before the 7th of the following month, and the EMP 501 is also closed during the month of May, because that month SARS is preparing for the tax season that is going to take place in July. Okay, So it's trying to consolidate all the previous year information and to ensure that they are able to accept all the IRP5s from the employers. Okay, so if you've got employees, you can register. If you are a cooperative, if you're a company, if you are a cross corporation, if you are a trust, if you are an NPO, if you are an NPC, if you are an employed individual, but you also operate a company as, I mean, a business as a sole proprietor, or you are a partner in a partnership. Okay, so I must mention that the EMP 201 is part of the ITR 12 or ITR 12. ITR 12. So the aim there is to make regular payments during the year. That's all what SARS wants then. Okay. Then another one that SARS is looking to talk to you about is the RIPI 6, which is called provisional tax, which is also part of the ITR 12 or part of 12. So remember, with the EMP 201, you submit monthly. Provisional tax, you pay it twice. So you pay twice, first and secondary provisional tax, because the third provisional tax is voluntary there. So what in the nutshell, when you are paying your first and second provisional tax, you are reducing your ITR liability at year end. Okay, so that is the ultimate purpose here. CIPC is looking mainly on the submission of Section 33 return, which must be based on an accurate revenue. Department of Labor looking at the national wage, minimum wage, and COIT, UIF, and STL. The author there says look at the EMP 201 first, because it could be that you are not submitting with the Department of Labor, but you are submitting through SARS. Okay, so you are not required to submit to both entities. You can submit one. Remember what we said there was that you must talk to your accountant, so that if you submit at SARS, at Department of Labor, you're gonna submit 0. But if you are submitting with the Department of Labor at SARS, you're gonna submit with the amount. So what is important is that the figures that you use in one of these entities must be used to close the returns of the second entity. All right. So now we've got Department of Labor. We've talked about it. So what does SARS look for in the financial statements? First, the ITR 12 and ITR 14 together with RIP 06. So they are looking at profit. If you've got profit, you must pay income tax payable, which is going to be disclosed in the balance sheet, and the income tax expense, that is going to be a deduction from the profit. Let us remember that the income tax expense is a profit on its own, is normally non-cash item, but the income tax expense is a cash item. All right, so SARS will be looking to say, did you derive profit? Do you have sufficient cash to pay your profit? So they are expecting a payment there. Affordability. Look at the director's loan on the financial statements, because there might be serious problems regarding that. Okay, so if SARS is requiring supporting documents, SARS believe that you are disclosing less profit. As a result, you are paying less tax to SARS. They might want supporting documents to validate the expenses that you have claimed in your income statement. All right. So EMP 201, they are looking at salary expense, because they want to see the UIF, the SDL, the COIT. Okay, the director's remuneration, the contribution to the EMP 201, and the contribution of the employee, the COIT. Are you registered for COIT? They will be interested to do that as well, even though labor is much more interested, but SARS would want to know, because they are interested to find out if your expenses are accurate. That they are looking at sales, and they are looking at expenses. Remember, in the income statement, if you are registered VAT vendor, the sales must exclude VAT and the expenses must exclude VAT. Only the expenses that qualify must exclude VAT, and only the sales that qualify that should exclude VAT there. Then we go to the financial statements, which at SPPSA we urge with you that the financial statements must be accurate at all times. Okay, So let us remember that with SARS, if mistakes are not corrected with time, they've got consequences. Okay, to make sure that you are properly prepared, this volume 7, is very much important to you because it gives you basics in terms of what you should understand and what you must know. And then once you have got volume 4, get to volume once you have volume 7, then get to volume 4, because volume 4 has got deadlines and responsibilities there in terms of what you need to do at each month end. Okay, then if we look at SARS compliance portal, we say please make sure that you talk to your accountant, that you register on time. Then once you have registered, make sure that you submit your submissions, your returns on time, and you submit only accurate returns. If you've got a debt, the FIP must always discuss that with you so that you can pay on time. If you can't pay on time, make any payment arrangement with SARS on time and make sure that you honor your arrangement. All right, so with the payment arrangement, there might be instances where you want to alter the arrangement with SARS. Maybe you want to pay a higher amount or you want to pay a reduced amount. Make that communication with SARS as well. Okay, get into your e-filing, check your correspondences with SARS, print them put them in your file, and respond and put all your responses together with the correspondence so that there is no mismatch there. Okay, we talked a little bit about documentations when we're talking about the income tax expense. So SARS is very much interested in your documents, especially the documents that are gonna prove your expenses, and also they are interested on the VAT documents, the documents that are going to show the sales and the documents that are going to show the expenses. So there are a lot of documents that we deal with when we're dealing with the VAT. So make sure that you have that documented for each VAT return there or each VAT period. Okay, so if you're doing your budget properly, it will help you to understand also your tax planning, so that as you go on, you infuse how your budget affects your tax planning there. Okay, Department of Labor, let us make sure that we understand issues like the Basic Conditions of Employment Act, the Occupational and Health Safety Act, and the Labor Relations Act, and the COIT. Those are very important legislations that that Department of Labor is interested on. Okay, I like the relationship between COIT and OHS. All right, because OHS is a mitigating factor for the Department of Labor from them paying the COIT to you. Okay, but it's not a joke. Make sure that you are registered for COIT so that you can pay for your employees in the case of injury during working hours or in the case of death during there is a story that I know where in one of our clients, so I think this employee had a fight with this other guy over the weekend, for what they were fighting for. Then on Tuesday, the guy who fought with the trainee got into the office and stabbed the trainee to death, and the trainee died in one of our clients. And unfortunately, the client was registered for COIT, and they claim all the expenses relating to that from COIT. Imagine if somebody dies at your premises and you are not registered for COIT. It means that you will be responsible for all the cost associated with that. So please avoid that and don't get into that situation. All right. So CIPC, okay, now COIT, when does DOL require financial statements from you? When your return on earnings is less than 30% compared from the previous year. They may want audited financial statements, all the EMP 201s that you have submitted with SARS, and the EMP 501 that you have already submitted. Okay, When we dealt with the slide, we talked about the ways or alternative ways to deal with the ROE suspicions, because we felt like this requirement about the audited financial statements is quite a big deal for small businesses, and we're urging the Department of Labor to reconsider that one, because it can be really costly for the small businesses, especially in circumstances where the small business has not gone through the audit training. So that one is it's really important that the Department of Labor should consider. Okay. Now we got to the CIPC. What are the core functions? The core functions are about registration, the disclosure, compliance and enforcement, education and awareness. We talked about company registrations. We talked about intellectual property protection. We talked about annual returns. We talked about monitoring financial reporting. We talked about licensing. We talked about the advisory role. And we said if you are about to submit to the CIPC your annual return, the Section 33 return, and the year is not complete, you can use the SMRS to do that. Okay. So make sure that you avoid these 5 mistakes. Okay. Do not register your company and get silent. Otherwise, without you submitting the returns, it will be deregistered. File your returns on time. Make sure that your contact details are correct. If you are registering your company with someone else, remember that who that person is and stay in contact with that person with issues relevant to your company. Update the business address if you are moving from one address to another, and remember there's a difference between the CIPC and SARS. Okay, so all the documents that you received from the CIPC and all the documents that you use to make any interaction with the CIPC, always file them, even if you file them electronically. Then we went to chapter 6, the customers and buyers, and we said here that when we're looking at customers, we must remember that we are indirectly talking to suppliers, because there is no customer without the supplier, and there's no supplier without a customer. Okay, so when we understanding the customer perspective, we asked 3 questions, 4 questions. We said, who are your customers and why do you exist? Okay, that means you must remember the people that you are serving, because you need to serve them diligently with respect, and you must draft your business practices to say, this is how I do business, this is not how I do business. Okay, so if you want this type of a product, or you want this type of a service, and you want it to be done this way, sorry, I'm not the right person to help you, you must go somewhere else. Although that is not easy, because some of the people want these services at gunpoint, and you can help them, but and sometimes it's not really easy to report these things, because you report these things, the next moment you're found lying on the street on the pool of blood in your house. So there isn't really a good procedure on how to deal with it. But it's nice when at least we know that this is how you do business. All right. Okay. What type of relationships are you building with your suppliers? We said a customer must build a good relationship with the supplier. We found that a good supplier requires a good customer. A good customer finds a good supplier. Okay. What financial indicators are customers looking for in your financial statements? That is, now if you are a supplier, we're looking at the sales mix, the revenue trends, the receivables, the legal cost, and the bad debts. And we talked quite length about those to say what is it do customers look to find when they are looking into those things. Who is your buyer? And the 4 faces of a real customer. The cash in hand, we talked about that. The entitled relative, we said you must set minimum standards there. The window shopper, we talked about that. And the corporate buyer, we talked to that into some extent. Here we're just refreshing you about the things that we talked about in the previous chapter. How resilient are you on your customer? Okay, how reliant are you on your customer? How many customers do you have? Okay, which customer, to help you segregated your customers, to say this customer, no matter what, I cannot disappoint this customer. All right, this customer, I cannot start with this customer. Okay, let me do deal with other customers before I come to this customer, because you've got reasons. One of your reasons is that, remember, you've got your bills to pay, you've got salaries, you've got rent, you've got all other expenses to pay. So you cannot start with a customer that does not pay, and put at the end of your list someone who would honor their supply. So make sure that you understand that. What makes a supplier truly dependable to the customer? The time to deliver, the communication between the two, price consistency, and the value for money. Customers will also be interested in the going concern of the supplier, because there are a number of reasons why they are interested to that. Okay, make sure that your trading hours are predictable, and you've got frequent price. Your prices are stable, and you've got a consistent supply. All right. The reality of the matter is that a supplier also is a customer somewhere. All right. So sometimes it depends on the customer on the other side to say, is that supplier also supplying me properly for me to supply you consistently? So it's a wide value chain process, which, if it's done properly, we're able to service one another with diligence there. Do not make these mistakes. How you treat your friends in your business, because remember, these guys don't normally like to pay. Okay, don't sell cheap products and compromise quality. Okay, because the customers won't come back. Okay, when taking every customer, make sure that you scrutinize your customer so that you don't fall into a trap of attracting bad customers. Check your physical address if your customers are able to reach you, your digital address in case you are selling some of the things online, and you deliver the full print, especially on instances where you use another person to deliver your products. Okay, get your spending right. Don't just spend. Spend according to what you can afford. Spending has got information that tells us, okay, to say, okay, the way in which this guy spends means this, okay, and so forth. So be truthful to yourself there. Okay, get the response rules correctly. We talked about the 3-second rule. We talked about the 5-minute rule. We talked about the 10-minute rule. We talked about the 24-hour rule. So remember those rules when you are in business. Okay, just keep contact with those rules so that you can improve yourself. Okay, we said what you sell is not the product, but it's a promise, and we gave you 4 take notes. Okay, so we talked about one clear sentence rule. We talked about the market fit, which must be done monthly. We talked about visual consistency. We talked about customer vocabulary match. So those are the things that we talked about when we're dealing with this cycle CPD. Okay, so we said one of the things that you should have is the refund and customer complaints policy, and you must not really be strict on those. Use those to your advantage, and use those for the advancement of your customers. Okay, we also advise you that a trust is not about size. The relationship between you and your supplier, it's all about a signal. Okay, so we talked on issues like clear branding. We talked about social proof. We talked about industry leadership, and we talked about trust, which saw us leaving cycle 2.4 and getting into cycle 2.5 this afternoon, uh, where we're going to be dealing with competitors and the members of the public. So if we look at competition, this picture here is very important, because it talks more about the reality. This is a reality of the situation. This picture, it talks about the reality of the situation. So this guy wants to swallow this one. So these are competitors. This guy might leave this one, this small one, that is for him to continue to operate. But if this big fish is aggressive, it might swallow this small fish, so that there is only monopoly in this situation here. So a competition is a situation where a customer can get one product from many suppliers. The same product exists, and the alternative is also exist, or something similar also exist from more than one supplier. Okay, take for instance a cool drink. There are a lot of cool drinks. Okay, so there is a lot of competition around cool drinks. There's a lot of competition around clothing. There's a lot of competition around what we eat. There's a lot of competition around what we drive. There's a lot of competition in the music industry on what we listen. All right, so there is alternative. Okay, if you can't get Bob Marley, yeah, you can get Lucky Dube, or you can get into another guy. Okay, there is normally one supplier that is looking for a supply, and when there is more than one supply, that's when competition exists. All right, we will deal with some of these life situations when we deal with this competition cycle. We also deal with some of these things when we're dealing with chapter 1 volume 6, that is the business idea. Maybe we should mention that competition exists in an open enterprise system. There are instances where competition does not exist. Somebody was telling me, one of the doctors that were studying in Cuba, that there isn't really much competition in Cuba. Government owns everything. In South Africa, and particularly in the small business environment, you will find that competition exists throughout. So you should get into this space prepared. This is why we're offering these sessions to you. This volume is going to help you to deal with what the basics are and what you should know to stand through the competition. At the end of this chapter, you will agree with us that competition requires a specific attention and may require a specific person in some instances to look at it from your entity. Well, we do also understand that within the small business environment, that is not always possible to have someone dealing with competition, but the detail, the amount of detail that is required, unless you are not really worried about the competitors, but there is some form of attention that is required for you to deal with competition. Okay, competition is war. Competition is war. So always fight to win. Okay, in business, you don't lose to the economy, you lose to the person selling next to you. Well, there are instances where competition is just right where you are, or you will be lucky if the person is far from where you are. All right. um, I like how doctors and lawyers operate, but I don't see the same thing from accountants. I don't know why. Doctors can operate in one space, lawyers can operate in one space. Accountants don't normally do that. They always want to separate themselves from one another, and they want to be far apart from one another. I don't know why. Okay, they are more business capable of doing what you do. Okay, so don't think that the product that you are doing, you are the only one capable of doing it. So there are more businesses looking to do better than you do, or in exactly the same way, but in a much preferred way. So that's how competition exists. Okay, so as we said earlier on, this presentation explores how to use the financial statements to understand your competitors, to analyze their strategies, and to develop tactics to outperform them in the marketplace. So that is why we're getting you into this situation. So we want you to understand that amongst other users of financial statements that we have dealt with, there is a competition that may harm you. So we are trying to make you alert in terms of how competition works. I've seen this competition also around, not only from the general medical practitioners. There is a strong competition also that is coming from the dentists and the gynecologists and obstetricians. But my observation is that these guys are not worried about competition. I don't know why. Perhaps it's because of networking. What we've picked up is that if you, let's say, if your wife is pregnant, the medical doctor, general practitioner is going to pick that up and is going to recommend a doctor to whom you must go to. Okay, so they cycling themselves, they boggling themselves like that, so that money circulates like that amongst them. Maybe that's another way of dealing with competition. All right, but if you look at the numbers of the customers that they attend, they are not a lot. The gynecologists and so forth. And I don't know whether they are paying attention to competition and they are having strategies to deal with customers and to work outside the network price, the network system, to get more clients into exams, into their practices. In this chapter, we'll also examine how to spy on competitors without you breaking the law. So we will do that in a much smarter way. Okay, use your own sales data to predict what your rivals are doing. Turn customer feedback into competitive intelligence and set out systems to deliver and auto innovate every time. You will agree with me now that at this stage, really small businesses is not just opening a company and starting to do what you want. There's a lot that you need to consider. There are a lot of things that must be taken into account to make sure that your business runs smoothly. That is, if you really have to outperform them, because if you remember when we started, we said um, this guy here, with this guy here, um, in this competition, this small fish can continue to operate. This big fish may make a decision not to swallow this fish, or may make a decision to choke this fish up to the wings, if those are wings, all right, and make him continue to exist. So that is the decision that this big fish have to do. They have to take. So he doesn't have to outperform this small fish. All right, he may leave him to exist just to make sure that there's a balance in the economy for the customers. Okay, outperforming comes with additional challenges. You should remember that as you are busy looking to outperform or to compete with someone else, there is another person looking to compete with you exactly for the reasons that you are competing with that other person for. Okay, so if you want to get into market because you find that the price is too high, maybe the price of bread is 15 rand, so you want to bring bread that is going to be 5 rand, I mean that's going to be 10 rand, there is someone who would want to come into price bread much lesser than yours. So competition is evolving and competition goes on forever. So be careful of those things. So when you get into business, always remember, why are you getting into business for? So that you keep on working on the reasons and you don't get tired and you are outperformed and you no longer exist. Competition is an activity where two or more business compete for the same product. They sell product or services that meet the same needs for the customers. So we talked about two competitions, that is the direct competition and the indirect competition. All right. If we look on the direct competition, we see that the business are selling the same kind of product to the same customer. Okay, so An example here are the three butcheries that we mentioned in the book that are selling meat to the same customer. So the customer has got a choice to say, I'm going to go to butchery A, or I'm going to go to butchery B, or I'm going to go to butchery C to get the same type of meat. Okay. So there are also indirect competition. What if customers do not find the meat? Okay. So they might want maybe to buy seafood, fish. Okay, they might want to buy canned meat. Okay, when meat is not there, and maybe it's not of a good quality, it might motivate buyers to buy something else, like fish or canned meat. So canned meat or fish, wool brands, fish, and all other stuff, they can compete with the butcher there. So that is what we call a direct competition. Understanding your competitors, who your competitors are, and what type of competition they represent is the first step in developing an effective competitive strategy. Okay, so just check for me from your business to find out if you have a competitive strategy. First, define what is a competitive strategy and understand if you have. What we picked up is that businesses are not worried about competition or competitors. One of my friends used to say, it's tough in the market. It's a dog eats dog situation. All right. So there are really suppliers that don't want to compete, but that is dangerous, because when you don't want to compete, always make sure that you've got the capacity to supply the product to everyone who wanted that product. It is not easy, though, to say you must not pay attention to competitors. Look at what happened to Nokia. Look what happened to Ericsson. Look what happened to Philips. Look what happened to Motorola. Look what happened to Alcatel. These were big cell phone brands that we now do not hear more about them. Competition is important because it may help you to solidify your product or service so that you keep your market share, you keep existing in the market. Okay, there might be three levels of competition. That's what we call there's what we call aggressive competition, there's what we call a fair share, and it's what we call gap filling competition. In the aggressive competition, these are competitors who want the entire market share for themselves, aiming for monopoly status. They use aggressive tactics to eliminate competition. So if this guy swallows, so now there are two competitors. Let's say there's one market, there's one customer. There are two competitors. There's this guy, big guy, and this small guy. So of course, this one cannot swallow this one, but this one can swallow this one. So if this one swallows this one, then there is no competition. There's what we call monopoly. But if this one keeps this one alive, or even if he keeps him alive to a smaller extent, there's still competition there. Okay, so just remember that for me. Okay, in the aggressive economy, these guys normally have a strong financial backup, can lower their sales prices into unbelievable price for a long time. They've got no problem to operate at a loss for a longest time. They they work on strengthening the product offering or service offering and service offering experience. They invest in huge marketing campaigns with huge and expensive marketing campaigners, have strong shareholder base, have access to market capital at all times. They can get into debt at all in all instances in as much as they want. So that's not something that you will find at small businesses, because there are a lot of financial restriction and financial limitations at small businesses. But even at small businesses, I've seen instances where people are getting financial backup from friends, from previous colleagues, and so forth. All right. And we have seen people succeeding using different forms of competition styles, okay, within the small businesses. With the fair share competition, we see competitors who accept sharing the market because they lack capacity to serve everyone. They focus in maintaining their portion on the market. So this guy can, if he leaves this one, he falls within the fair share competition. But if he kills this one, becomes the only one, he will then be aggressive. Okay, within the fair share, there is no much funding that these guys are exposed to, but they put effort on product optimization and eventually earn more clients over time. But that is usually uh, it for those guys that are not looking for something more. Okay, so they sell what they have available. When that ends, they close the shop with peace. They go home, they don't stress, then they come back, open at the normal time, sell what they have, and once it is done, they go home without a problem. So they don't stress much to say, hey, if the customer cannot find this, they're gonna go to another competitor. No, they are only there to close a particular gap. I remember this when I started getting into business with my parents. I was doing standard two then in 1995. So there was a shop next to the school. So that shop only opened between 6 and 8 o'clock and opened between 5 and 7 o'clock only. All right. And it really amazed me. So they were selling only school related products like bread, butter, muffins, fat cooks, mixer drink, sweets, shirts, needles, threads, and, and socks, and Disprin and Panado. They sold only those things, you know. I remember at one stage they also opened between 1 and 2. It was during a long break in our school, and they will open again between 3 and 5. You know, something like that. So maybe these were fair share competitors, and they were only serving the needs of the students in those particular moments. So after that, the owner will be doing something else and comes back only on those times. Then you've got gap filling competition, new entrants who identify and fill a specific gap in the market that exists, that existing competitors have overlooked, such as cleanliness, specialized services, or unique features. It does not end here. They also attract their own competition as well. So, if irrespective of which bracket you get into, you always attract a competition. We'll deal with this when we're dealing with the volume 6 in chapter 1, volume 6. Each level requires different competitive strategy and responses. Understanding which level your business operates in helps determines appropriate techniques. So first you need to identify who are you, then you will need to develop a technique that is suitable for your definition. Okay, the market share. In this case, we've seen that we've used, because competition, we cannot use one example, okay, but you can use the example that we've used in the book to understand your situation. So in this case, we're using a university, okay. So in this case, we're using a student as a customer, okay. Then we're using one university but 5 faculties as competitors. Okay, so this student passed the matric and with distinction. He passed with a level 7 in mathematics, level 7 in physics, level 7 in accounting, level 7 in everything, and may qualify for different university products. But these products are offered by different suppliers. Okay, one of these products is chartered accountancy, which is offered by one supplier, which is the Faculty of Economic Sciences. He can also get into actuary, which is offered by a different supplier, which is the Faculty of Actuarial Science. He can get into engineering, which is offered by another supplier, which is the Faculty of Science. He can be an architect if he was he can draw very well. The student is talented, so he can get into build the faculty of built environment, or if he wants, he can be a medical doctor because he's very good in biology and physical science. And doctoral is, I mean, medical doctors are offered by faculty of health sciences. So this student has a duty to choose a correct supplier. Okay, this is not another um, this is this is another way to revise the previous chapters. Okay, but what is important is what the student wants. Uh, Sometimes some students don't know what they want at this stage. Okay, so what qualification will improve the student life? That was the ultimate choice of which supplier to choose. Okay, okay, all faculties want to admit the student because the student has done well. The faculties are competitors and the student is the customer, as we've already mentioned. They cannot split the student into five ways. In other words, the student cannot study in all the faculties. Okay, so if yourself you are buying bread from one supplier, you cannot buy bread from all of them. You need to buy from one supplier. It depends what type of bread you want. You want fresh bread, you want you want bread that is gonna stay for 4 days in the fridge. You want bread that has been baked well, the bread that tastes well, a certain type of bread, you know, and so forth. So it's a similar situation here as well. Which faculty is going to get the student and why? So that is not the question that needs to be answered by the faculty. That question already exists in the student mind to say, who do I want to be after 5 years from now? And who do I want to be associated with? Okay, the faculties are also looking for good customers, students that will do well in their customers and in their courses. So they don't want students who are gonna be repeating the same course all over and all over again. The student is gonna bunk classes. The student do not answer questions. The student submit assignments late. So there is no pool of widely exceptional students in the market. So these faculties must compete to attract best customers, that is, these students. When this happens, they will rely in the product or service or long-term strategy to win the student. Okay, this will lead us into the company strategy. What is or what should be the strategy each of these faculties should use to obtain this student? Okay, that will also validate the customer or the student strategy as well. Okay, one of the things that we should mention here when we're talking about bread, we're talking about price, we're talking about freshness, we're talking about the brand, we're talking about how long the bread can stay in the fridge. We're talking about, do I want to be associated with that type of bread? Am I happy to put this type of bread in my trolley? How do I feel if I take another type of bread and I put it in my trolley? How do I feel when people see me with this type of bread? How do I feel? How do they feel when they see me with this type of bread? So that is what is going on between the student and the supplier as well. Okay, so this is a two-way situation. Okay, okay. So business strategy, still the fire, not the logos. A strategy is a plan for what the business will do over a period, who will do what and why, okay, and how things will be done. Typically covering 5 years, it addresses opportunities, strength, weaknesses, and strength. From what we've seen, there is no small businesses that has a written strategy, even for 1 year. All right. So that's where we want to encourage our small businesses to start getting into a strategy, to start getting into thinking about where they want to go in the nearest future. Small business environment can be really tiring, but the question is, are we tired um, because of right reasons, or we are tired on things that we should not be worrying? ourselves about. We are happy that we have introduced this concept now. We are happy that we have introduced this concept now. You will remember that we have introduced car in cycle 1.4 CPD. With the car that we have introduced in cycle 1.4 CPD, we believe that it might be easier for the small businesses to at least prepare a 3-year strategy now. All right. So we can assist businesses to prepare their strategies based on the car, but that will take a lot of time because it's a new thing that needs to be done. But first, we need to make sure that the businesses see a need and the importance of having this business strategy. Okay, these are the questions that these faculties may ask themselves. The economic sciences, based on the book, how do I retain the financial resources I have? Where can I find more funding to for accommodation to accommodate the student? The Faculty of Science may ask the question, where do I get the money for tuition? Okay, the Actuarial Science may ask, what can I do better? The Built Environment may ask a different question to say, how do I maintain my financial position from now going on? The health sciences is faced by more difficulties. How can I find the student on my own without relying to someone else? All these questions may lead to a development of a faculty strategy. All right, a strategy may answer the main question, may see the main question being answered over time. So a strategy, uh, first they must get the questions right, and over time they may answer that question. Okay, so the strategy is a way of answering a particular question, but break it into a spread of different years. These questions drive the development of business strategy and may guide competitors in analyzing each other's financial statements. This is where the learning and development takes place because that's where you compare yourself to other people. That's where you find areas of improvement. That's where you notice that no, you are spending too much time on things that are not necessary. Or you realize that you have been ignoring a very important potential in your business because you've been focusing on something that is not leading you to the direction you want. So these are the things that you should be taking into account. What needs monitoring and evaluation over this period in time? Because if you put a strategy in place, you write the strategy down, that strategy needs to be monitored and evaluated. May also require the infusion of some controls to ensure that the question is ultimately answered over time. So this is a very, very detailed chapter and it's a very comprehensive. It requires some form of discipline and it may require additional resources in your business. Unfortunately, one of the problems within the small businesses is that it becomes your business, the business becomes you, and you don't have enough time to deal with all of these things, and you don't have enough trust that if you can employ someone else, will really get into what you want to get into. Okay, so if you get someone else, you need to spare time to train this person, and once you're training this person, your things or your work is not going far. So there's a lot that goes on. So we always wish that there might be a skill that is coming free of charge, or where you can get money to pay that particular person, and for that person to run with some of these activities. But unfortunately, that situation is not there. So you have to understand that these things take time. These things may want collaboration. I've seen some of the family business doing well in this, where they split the skills amongst themselves. But of course, that needs monitoring, self-evaluation, and amongst others, trust. So these things are very, very, very important. Okay. So the Hustler's Competitive Intelligence Toolkit is segregated into four. One, the price advantage is talking about the affordability and value. Okay, how to respond to this? You might offer combos, payment flexibility, discounts, delayed payments. Although those have got other problems. Number two, a location and strategy. Look at your transportation and accessibility, how to respond, open in a delivery zones or underserved suburbs. Business hours are part of the location strategy. So look on that one as well. So you've got number three, which is the social proof. The social proof is about you getting through the customer and product and service follow up. Okay, what do you do after you have served the service? What do you do after you have sold the product? So you may want to look into that as well. How to respond, build your own customer wall or story highlights. That one is not really easy because it needs you to sit down and consider what you want to say, what message you want to put through to the customer at what time and all those things. I'm sure you have seen when you're watching news or you're watching soapies like Generations or Mubango. I'm not sure if Stingo is still there. There are specific adverts that are coming during break. And if you are a radio listener, there are specific adverts that are coming just before the news, and there are specific adverts that are coming after the news, just after the news. All right. So the timing of how you respond and what you want to say is very important. Number four, product launches. Improve your product daily, but only add needed features. Okay, don't just improve for the sake of improving. So that might want some form of a market research to say, uh, what do customers really want from a product? Occupational products like accounting, medical services, architectural, engineering, and all those things is very difficult to improve, especially when the customer is not really much informed about how the product eventually or actually works. So they normally don't know where exactly the product must be improved because they don't know how they consume it, when they consume it. They don't know the ingredients of how the product is made and all those things. So normally this one occupational services would normally improved mainly on price, and pricing is very sensitive because people who are offering a particular product are not normally don't normally possess the same type of qualification, same type of experience, and all those things. But customers don't normally know that. Hence, we have SPPSA to help us to understand who should do what, when should that person do it, what is the collaboration between the people, the parties inside SPPSA, and why that collaboration is important. In war and business, there is a winner. The winner is not the loudest, it is the one who knows the battlefield best. This is where SPSA comes in to teach you, educate you, train you, and make you understand the battlefield. What we have seen is that many businesses have got good product or services, but they do not understand the business side of it, of those products. We've seen many qualified people getting into business for purpose of making money. Unfortunately, business is not about making money. It's an all-inclusive activity. Understand the game, understand how the game works, and that will lead you into understanding the battlefield on its own. All right. So these are the things that we thought we should mention to you so that you understand these things much better. All right. Than thinking that it's all about making money. In business, everyone lies, but numbers don't. Financial statements are not just for accountants. They are a weapon for warriors. The smarter you are with numbers, the more dangerous you become. So what is important is that for you to do that, you must report accurately. And if you're a small business practitioner, get involved into what your accountant is reporting. Start working hard to improve your financial situation than to invest in cooking your financial statements. I've seen many instances where customers will say, Mr. Fuzana, can you please send me the financial statement? Then Mr. Fuzana will send the financial statement. But they don't really know where these monies that are listed, where did this guy get all these monies that are listed here? So the best way to deal with that is for you to get in to be involved in your business, work with your accountant, ask questions from the accountant, make the accountant make the accountant respond to some of the questions that you are asking. Make him aware that you want to know more about your business. Make him answer in terms of where is getting the amount. Understand what goes into your financial information and trace all the financial information items. Ask your accountant where is he getting the amount. It doesn't matter if the accountant is not explaining everything, but he must be able to explain some of the things that you have identified. Remember that the production of financial statement needs your involvement. It is not something that can be done by the accountant only, but the small business practitioner should also deal with that. There are four things that we should look at when we're looking at the financial statement at this particular point of view. The gross profit margin is number one. So here it reveals pricing power and efficiency, but we have already mentioned that pricing is very sensitive issue when looking at the price of your supplier, getting your supplier involved so that you understand what goes into pricing and why. Also, how do you know if you are not overpricing yourself? Some prices are regulated and some prices are not regulated. This is where we see the difference between price giver and price taker. So if I can ask you a question and say, can you tell me if you are a price giver or you are a price taker? What would you say? Would you say you are a price taker or you are a price giver? And what is the difference between the two? Can you give me that difference? We look number two on the operating expenses. It shows the cost control discipline. This requires a lot of education because that is where most of businesses fail. Businesses don't understand their cost and they are unable to defend their cost. They are unable to produce supporting documents to validate their cost. The cost in the income statement can indicate financial discipline problems. Okay, so we can look at the financial statements and we can tell that this person is unable to deal with his or her financial affairs properly because this person is not disciplined. Let us look at the debt on number three. Debt levels of the business may indicate financial stress and poor leveraging. The quick question that must be asked there: could they could these competitors default very soon or scale faster? Okay. In a bad scenario, your competitors pray that you default on your payment so that you can go down, so that they can swallow your market share. All right. But in some instances, as we have seen different types of competitors, we've seen some of the competitors praying for other competitors to do well. Okay. Cash flow, it reveals business sustainability. And the quick questions that we need to ask, the key question that the cash flow answers is that are they using cash or credit to pay the suppliers? The cash versus credit is becoming an important issue, especially when you're dealing with SARS. But generally, cash may help you to build supplier confidence, but using credit can be another way of managing the same cash as well. Okay. But if people are looking at the financial statements of the competitor, they may look for what sources of cash. So is more cash coming from ordinary activities or cash is coming from investing activities through selling of PPE, or is it coming from financing activities through issuing new shares, getting into more loans, disposing shares, and all those things? Okay. What is the cash balance from year to year on the cash flow statement? Let us remember that all the student needs are on cash basis. The student does not work on the non-cash. So these are the issues that these faculties are looking when they are looking on the financial statements of each one of them. Okay. So once you are done with your strategy, you may want to deal with your budget to say how what resources you must put into the strategy to answer the questions that your strategy was answering. All right. So a budget typically covers 1 year and can help to answer the strategy over the specific strategic period. There are three types of budgets that influence financial statements. Understanding the strategy helps us understand how the budget and how the budgeting technique require what is the budgeting technique that is required at a small business environment. There are only two, it's been 10 years now since our firm started operating. Uh, there are only two clients that are very keen about budgeting. I think we've got the biggest client base, but budgeting is not something very popular within small business, and that is what we're trying to to teach these small businesses to now consider. Operations budget talks to cash flow from operating activities. The operating budget covers day-to-day business activities, including revenue, regular expenses, and maintenance costs, amongst other costs. It affects the income statements, the balance sheet, and the cash flow. The second budget is the personal budget, which is also infused in the cash flow from operating activities. It covers all the employee-related costs, including salaries, benefits, training, and development, and some of the statutory payments. It also affects the income statement, the balance sheet, and the cash flow. Then we have the capital budget, which covers long-term investment in assets, equipment, and infrastructure. It may affect the income statement, balance sheet, and the cash flow. Normally, the capital budget is reflected on cash from financing activities and cash from investing activities. So competitors may analyze this budget to understand how their rivals finance their strategies and operations. Some industries require that budget is made public. This is not the only time the competitors could access. This is the only time the competitors can access the budget if it is made public. Otherwise, the budget is not always made public. In a university where we've seen this number of faculties, each of these faculties may have access to their budgets. Budgets are really made in public in a small business sphere, all right, or in private sector generally. Talent as a competitive advantage. Staff in a university is a production team. The more qualified and experienced the staff is, the more credible the product is. Students until today are very proud of their lecturing team. Okay, uh, I remember when I joined Gonki, where I trained as a chartered accountant, a firm that operated in Joburg. I salute that firm, Sindiswazilwa, Zingonki, and DZ Gonki. Thank you for giving us space there to train in your firm. We really learned a lot from your firm. So there were lots of guys. Thank you so much. Thank you, Esther Zanazo. Esther Zanazo is a lady that found me, that brought me to Nkonki Incorporation. Otherwise, I did not know much about Nkonki, but through the help of Esther Zanazo, I ended up finding Nkonki. So when we got to Nkonki, there were lots of guys that were coming from University of Joburg there, and they talked more about their lecturers. Is so and so still there? Ah, I like. Is Al Haji there? Is Jonathan still there? Jonathan. You see that students like that close association with their lecturing team. Then when I left training for employment, I realized that there is also a good connection between partners and the trainee, because when I got into the working space, I found people asking more about whether a certain manager is still there. I didn't like that guy. He used to ask us to do this. He used us to ask us to clean the GL, and all those things. So there is that close connection. So indeed, it is true that students and those people like to be associated with their previous past, only if the past was bad, was good. Okay, benefits of high quality staff: there are no delays. These guys are efficient. They work without supervision. They normally require minimum training unless or no training unless there's something they want to clarify. So they take more or less time converting a student from point A to point B. Okay, so students do not take time to notice this as well. So, how hard the lecturer works. Students don't normally take time. I saw a clip on the socials of certain students that were inside the lecturing hall, and this student was saying the class is full, the first class is full because we're here to check how the lecturer is, and if the lecturer is bad, we are not coming back to classes. But if the lecturer is good, we are going to come back and attend. But what makes a good lecturer? Is it how you speak? Is it the things that you talk about? Is the things that you have? Is it about the qualifications that you have? Is it about the car that you drive? Is it how you dress, how you look like? Is it because you are married or you are not married? Is it because you are making a lot of jokes in class? Or are you telling the scope to students? Or your tests are easier? So there's a lot into that statement, but of course it cannot be covered in that class. Okay. So these quality lecturers regularly improve their quality offering and continuously working to be the best. They increase innovation and creativity because there are resources and the working environment is allowing because it is conducive. All right. So these are the things that these lecturers are busy working on. Your staff can be your biggest brand ambassador or your fastest way to your customers. Okay. Um, of course, lecturers have got different habits and styles of doing things. I remember when I was at Forte, there was a lecturer there called Professor Brown. Professor Brown told us something really phenomenal. He told us that the previous literature suggests that a lecturer, when he gets into class, he already loses 30% of the class, just how he appears and then all those things. There are people say, "Yo, I am impure shame na, yo, I am done as a poor agent," or all those things. So 30% of the class you may lose on things that are outside what you are here to do. Okay, so that's what Professor Brown told us. However, at a small business environment, entities have fewer staff members. Staff at this environment want to be paid on time, paid the right amount, to be respected as well. If we look on the Faculty of Business environment, this faculty has employed numerous professors and doctorals across all years of study, creating a strong competitive advantage over other faculties. The question is why other faculties cannot do the same. Is it because of the strategy, the direction they are taking? Is it because of the leadership and faculty vision? Is it because of the funding? Or is it because of the location of the faculties? Remember, in some universities, faculties are broken into schools, or into colleges, and you find another college in the far side of the province, and you find another college in the deep side of the province, and all those things. And these locations have got different crime rates and statistics, and a student would may prefer to go into a certain a college instead of other, not because the other college is not well facilitated, but the student finds more protected if he goes and takes a different direction. Okay, so that for me really gives us insight into how to position yourself to beat your customers, really, if you have to beat them at all. I've seen businesses located in good spaces, but because of some of the things during the product offering, they are not doing well. How to spy on your competitor talent? There are four ways in which it can be done. One, staff attitude. Staff is the loudest speaker when things go wrong. They are always silent when it is okay. They give it away all the time. Staff attitude may reflect leadership and training quality, secret shop competitors, and record service tone. It is no joke that employees are an investment. Number two, skills execution. Proof of actual competence. Benchmark your team using real tasks because they've got the information of another staff faculty. So they can see. For instance, myself, I've got master's degree in accounting. So if I pick up the financial statements of another competitor, I may see that okay, this guy maybe is doing well because is a doctor of commerce, okay, or I may ask myself why I'm doing bad when this guy only have a diploma in what he does, all right, which might make me worry to say if he has got diploma and he's got so much customer base, are the customers aware of the limitations of what this guy can help? On the skills execution, it can help to streamline. It is also an avenue to get better. All right. Employee retention indicates stability or toxicity in the workplace. Monitor frequent staff challenges. The employee and the employer are able to reach common grounds for the benefit of the institution. That is also another possibility. We may also want to look at number four, that is online reputation. Check if all staff are mentioned in the review. Okay, dealing with employees require a competent and a dedicated personnel. Hence, you find that in some instances, there's what we call corporate services or HR department that deals specifically with what which deals specifically with the needs of the staff members. Okay, so we had a client in Alexandra, which was a food fast food stall, which upgraded from informal staff to a uniformed, trained uh, order guidelines with upselling skills. Sales rose from 40% to 60%, and the computer copied their styles. So what that guy did, he focused more because he was a restaurant. So he focused more on the client service. Okay, to say what happens when the customer comes, directing the customer to the seat, to the table, orientating the client to say where is the toilet, bathroom, what do you need to do when you need help, pressing here if you want me to come. I'm gonna come more frequently. I'm taking the dishes that we have used, and so forth. And, so it was more about client focus there, you know. And client focus is not only about skill; it's also about the number of staff members you have. Because remember, the waiter or the waitress doesn't have only one table. There are a number of tables that the person needs to satisfy or service. So how does that one waitress make sure that he serves to the best of her ability all the tables? So that's where this guy was focusing to say, this is where I put more money so that I make sure that the, the customers that come to me have got a better service experience. So for me, it's not more about food. It's about the fulfillment. It's about the comfort. It's about the joy. It's about a good experience that the customers find when they come to my space. So something that others may learn. We once had a client that wanted to open a similar situation in Port St. John's, and one of the questions that I asked the client was that, do you go to your competitors and eat there if you want to open a restaurant? Because that's how you get a feel of what is in the market. So it's not about your passion to It's not about your passion to sell what you think you know and how much you trust yourself, but it's about a gap that you want to close in the market. How is why people will leave their existing suppliers and come to you. So you must find that really one thing that even for their suppliers will be enough if they are told. Cash access, the fuel behind the flesh. The further growth built and environment remains cash rich through strategy, sponsorship, and partnerships. Professor Kopat Maleche, the dean, actively seeks support sponsors and funding. He doesn't get tired. There are three strategies that help this organization move forward. That is the faculty of build and environment. So, can you learn from these strategies? One, financial support. Two, increased visibility. Three, networking. So if we're looking at the financial support, so we say that the sponsorship provide crucial funding, resource, and material to achieve goals. If we look on the increased visibility, sponsors help to expose the faculty of build and environment to new audiences, including potential fund donors. So increasingly meeting more people who can fund the business is unlike meeting those people once. Networking opportunities, sponsorships connect the faculty with stakeholders leading the new partnership. So that talks about business continuity so that the business does not die. If we look on the increased visibility, we can say that um, maybe we should ask a question to say, because this is talking about funders and donors, do you know what is the difference between a funder and the donor? When is someone a donor and when is someone a funder? And what are the consequences of those two brackets? In business, having the best product means nothing if your fuel tank is empty. Cash is not just king, it's your weapon. Shield it and parachute. So unfortunately, within the small businesses, there are lots of pressure when people start businesses. They see opportunity not to grow the business itself, but they see an opportunity to do things outside the business, to buy a car, to extend my home, to send my sister to school, to renovate, to get into farming, to buy a taxi, and all those things. But there isn't that what at SPPSA we believe in to say people must make sure that their businesses today will be able to survive tomorrow. So there is that lack, which we think that without cash, and if we're misusing or we're misspending cash, our businesses might not see tomorrow. So be warned when you are using your cash. I remember one of my clients used to tell me and say, "Hey, see, it's hand to mouth. This business is a hand to mouth." So whatever cash somebody is getting, is thinking of going to spare, is thinking of going to Wimpy for lunch and all those things. So these are the serious problems that may get our business into. So competitors are watching into those things because competitors are investing, reinvesting in their businesses, make their businesses better, look better, and improving their products. So if you're taking money and eat it, and without investing in the business, you will soon go down. Which makes me remember about our firm, Kunoka. Kunoka is a very funny firm in many ways. We are the only firm in the whole Republic of South Africa that creates its own competition. So we train students here. We've got quite big groups of students that train with us. So after training, these students will sign them, and most of these students have done financial management. So they are doing 18 months for them to complete their diploma. So after 18 months, we sign these students out. Almost 90% of them will come back to me and say, I want to open my firm. Can you sign? Can you endorse me? Can you sign me? Can you be my coach? Can you? Then I sign those forms. So when you get into town and you see the accounting firms that are in town, they are from our students. And the sad thing is that, which is a good thing for me, because um, if the student was responsible for 4 clients, three of those students, once that student goes away, I know that I've lost three at least of those clients, because the clients are familiar to the student. They work better with the students because I've trained the students to know the client service between themselves and the student and the client. And the client got accustomed with that, you know. So each time, each student leaves with 3 or 4 or 5 clients. Each time leaves three leave our spaces with 3 to 5 clients, you know. And you can see from there that really this puts Kunoka into a serious going concern situation, because how is Kunoka gonna survive if this is what they want? But Kunoka doesn't exist primarily to make profit. Our main purpose of existence is to extract students away from home and bring them into marketplace and give them necessary skills for them to survive, because we know that once they are in town, they are able to employ 1 or 2 people, you know. And for us, it's the biggest salary, and is our biggest achievement, because at least we know that with them in town, with them doing what they've studied for, there's self-fulfillment even to them. And they are able to bring back at home, they are able to look after themselves, and so the economy is going well. However, that does not help Kunoka. All right, it only helps me. So what about Kunoka? So it's a very difficult situation. Spy on competitor cache access. So there is a clue, and what that clue tells us. Okay, and 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 okay, yeah. There is a clue. There is what that clue tells us, and if you are a competitor, this may tell you what action to take. So clue. So if a business as a competitor has got frequent promotions, it might tell you that they are in need for fast cash or they need a volume boost. So as a competitor, you must check if their prices have dropped at month end, okay? So that you can deal with your own prices too. The payment terms, they normally ask for delayed payment because they don't have enough cash. Okay, so if you guys have got the same supplier and the supplier is able to diverge information, because remember, there is now, it might not be possible to ask the supplier about the settlement behavior of another competitor because of POPIA. Okay, and if they are starting to lease more equipment than owning them, it might mean that they need more cash. They are more strained. They need to keep more cash for themselves. So you may want to watch asset changes. They are downgrading their delivery vehicles or the vehicles that they had, including the number of assets they have. Okay, may now tell a story. Okay, staff payments, late salaries, resignations of key personnel. Staff talk a lot, so they are the loudest speaker if things are not going well in your business. So you will know if things are not going well. Well, depending on the competition type you want to be, you may celebrate that, or you might take some sympathy. Some of the staff members, you may employ them if you are that kind of an employer, or you may assist the committee to say no, re-employ your person. I am gonna support you for at least 6 months in a free loan, then you will repay me later on. Okay, funding announcement, equity partnerships or grant, and that may mean that you have to Google the business name and find out if it has been awarded some tenders in one of the local municipalities. Street intelligence tip: if they are paying suppliers late, That's a red flag. Although it's another way of managing cash to pay suppliers late. If they offer discounts for upfront payment, they may be in short of cash. This could be another way of cash management strategy as well. So if they renovate twice a year, it may mean that they've got enough money or they've got debts that they are not showing in their financial statements. Where are they getting the cash to make the renovations at this time of the year? Why would they renovate such a good property? Be careful of arriving at a wrong conclusion because of how you see them doing things. Some of the decisions are taken for different reasons. Okay, so we have talked about cash management reason in the previous slide. Revenue layering, how smart hustlers build extra streams. Okay, your competitor does not win because they sell one thing well. They win because they sell five things without you noticing, and they package it so you think it's just one. Take, for instance, in our case of a university, tuition fees are the source of income used to pay registration costs for performing students. Government grants, significant funding source used for research, infrastructure, and core functions. Donations it comes from our alumni, corporations, and foundation. This one we use it for accommodation and meals. Commercial activities, revenue from licensing, intellectual property, training programs, and facility rentals. We use this one for that particular purpose. For short form learning, the money from there, from workshops and professional services, and delivery of online services, we're gonna use that money for a certain activity as well. In a world of shrinking margin, extra income isn't optional. It's a difference between surviving and scaling. The aim here is to attract better customers, and when those customers come, they make when those customers come, we need to make sure that our services match with their expectations. So these are the things that we need to consider when we're dealing with competition, because this customer is not lost when he comes to us. He has got an option of going to another supplier as well. So let us use our moment to fully service the customer. So what are the key takeaways? Competition is a mirror when used wisely. It reflects both when you excel and when you must grow. Understanding your competitors give your business an edge. All this information is in the financial statements, but it depends on whether the financial statements have been accurately reported. So it is very important that the competitors report their financial information properly using the SPPSA guidelines for you to make valuable business reasoning. Otherwise, information that is not prepared using SPPSA guidelines is not that much valuable because it lacks guidance. So there are a number of things that we need to take into account. Five of them, where we need to identify our customers, where we need to analyze the strategy, where we need to evaluate the talent, where we need to monitor cash flows, where we need to be innovative and to adapt. If we go to the number one, the first one, that is to identify customers. So know who your direct and indirect customers are and what level of competition they represent. You may need to do some research to know these guys. Some clients will also let you know about your customers to say, hey, do you know so and so is also doing this? Or oh, wow, I was once helped by that person and I was not satisfied. So you may ask, why were you not satisfied? But I suppose you don't want to get into the same trap as well. Analyze strategies. Study their financial statements, budget, and business strategies to understand their strengths and weaknesses. That information may also give you more information about threats and opportunities. It will tell you more where the business is going, how they intend going there, and in which way they intend going there. So when you start their financial information, you may also compare it with your strategy, or it can help you to develop your own strategy. So if they are helping you to develop your own strategy, then it means they are a little bit advanced than you, because you're developing a strategy for the first time. They have been developing their strategy and they know well how to deal with their strategy. So when you compete, just understand how do you use the information of the competitor, and what information do you want to extract from them. Remember, one of the things that we said is that competition can also help you to improve and benchmark, so that you've got a clear direction on how to move forward. If we look on evaluate the talent, you assess the quality of their staff members in total and how it impacts their competition. Do not be surprised when you find some or more of your staff members there, because this is competition. Your staff members are doing something that they were doing with you here. All right, so they find an opportunity to do that much more better there. So you may ask yourself, why this guy is employing much of my staff members. It might not be a bad thing. It could well mean that you are more informative in terms of what the staff members should know. So it means that you really invest well in your staff members. And that is something that you may put in your strategy or in some of the testimonies to say who are the best staff investor, because our staff members, when they live here, they are employed. Because there are instances where staff members uh, get to your enterprise and you say, no, I cannot employ this guy. Yeah. It will be the biggest mistake to employ this guy because he doesn't know much. Monitor cash flow, understand their cash position and how they finance their operations. This will inform you on what action to take, how to take it, when to take it, may help you to understand the business better as well. Okay, innovate and adapt. Use competitive intelligence to develop unique strategies that set you apart. Now, most youngsters are doing this, so they may help you to do that. So you may, there are a lot of other, so I think at small businesses now, we need to get into a situation where we say, um, here is a business that I have. I am willing to employ anyone who said is unemployed, but I'm not going to pay you. Come and demonstrate what you think you can do. Come and create experience that you need in my business. Then go and get employment that you want somewhere else. I think SPPSA is in that position where we want to encourage that type of situation. All right, understand my business, tell me where you can improve my business, and use that information as a stepping stone for your endeavors. Okay, do not rush when you're doing with innovation and adaptation. Formulate your strategy first and decide which method to use, which method you want to use, and how you want to realize it. Instead of fearing competition, welcome it as an opportunity for benchmark and improvement. Every competitor teaches you something. They also benefit the same way from your existence as well. Okay, I think it all depends on how we look at things, and really what we want from those things for our personal benefit. I remember here we once had interviews for a financial manager. So we had 7 candidates that came for interviews, and one of the questions was, why should we employ you? And I like this other candidate. Yeah, he told us, I think the candidate was truthful, told us that if you employ me, you're going to pay me. And it means that from that payment, I'm going to be able to come to work. I'm going to be able to buy clothes. I'm going to be able to send my sister to school. I'm going to be able to buy medication for my grandmother. I'm going to be able to provide transport from my nephew uh, in and out of the daycare. And now I'm going to be able to go out. My life is going to be different because I am now employed. This was an honest answer, but we were worried that this answer does not talk about us. Because remember, we are the employers. We thought that on top of that, or amongst other things, it was important that this person um, um, uh, would also tell us how we'll benefit from having him, you know, and what advantages, new opportunities we will see and experience for having him. But that did not happen. So these are some of the situations that we must be careful at the small business when we are looking on those instances. Okay. So we get into chapter 8, that is the members of the community, which is the second last chapter, because in CPD 2.6, we will be dealing with the last chapter, that is the directors of the company. So chapter 8 is the second last chapter there. Okay. So if we're looking at at chapter 8, perhaps there are questions that we might want to ask first as we go through this chapter. One of the questions is similar to other questions that we've asked previously, to say who exactly is the member of the community and who is not the member of the community. As we are saying that one of the users of financial statements are the members of the community. So who are these people? All right. What is the community in relation to the company? How does the company identify itself within the community? Or how the community identify the company in relation to themselves? Why are they separate? Why are they a separate user of financial statements? Okay, what makes them unique? These are important questions that we need to know as we get through this chapter. Is this a business community or community in general, or does it matter at all? Why would a community be interested in my set of financial statements? All right. Who may come to my business and say, look, may you give me a set of financial statements? I am prepared to look at them, the specific information that I want to see. So what could that information be? Okay, from a community point of view. Business community engagement, building stronger ecosystem. Understanding how business engages with the wider range of ecosystem and the mutual benefits of strong community relationships is important. There is a group of people that cannot be itemized in the financial statement, and that is the business community, or the community in which the business operates. And it is important for you as a small business practitioner to understand those people and to understand what their needs are from a business. We have already talked about the business ecosystem. The small business ecosystem has got 9 users of financial statements. We understand that now we should make mention that no business exists in isolation. Small businesses are part of a wider economic system that includes um, families and civic group. These are taken as community in which the company operates. NGOs and community organizations, these are an extension of the community. Number 2, government, regulatory bodies, and supporting agencies. In here, we talk about 3 people, that is SARS, Department of Labor, and CIPC. Then on number 3, we talked about directors and management. Number 4, we talked about employees. Number 5, we talked about lenders of financial statements. Number 6, we talked about shareholders. And number 7, we talked about suppliers. Number 8, we talked about competitors. And number 9, we talked about customers. So if you look at this properly, if you look at this topic properly, you will realize that what is important is to forget that you've got different users of financial statements. Now, what this chapter seeks to do it emphasizes on the fact that view the whole financial. So don't separate them and say these are the directors, these are the shareholders, these are the suppliers. Forget about their specific needs. Take them as who they are, as human beings, and say without them being shareholders, what more information they will be looking for. Let us talk about families, employees, employee families, and local residents who support the business. I remember I did a staff count at Kunoka, and we realized that we have employed 15 people on a permanent basis. And we asked each one of them to say who are they supporting with their salaries. We found that they are supporting 7 to 8 people from the salaries that they are getting from us. And those people are not residing in one household. So you can see to how many people you are connected to. All right. So families are very important. So when you fire or when you dismiss one employee, you can almost project what 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 you can almost project the impact that has in the broader society. Then you've got civil groups, NGOs, and community organizations that exist for specific reasons. For instance, SPPSA is a company that exists to spread awareness about professionalization of small businesses in South Africa. All right, because we've realized that small businesses are in deep problem because of lack of knowledge. They are not guided. Remember, there's no school of small business. So there's a lack of information in terms of what must be done and when must be done and the reasons for that. So we are closing that gap. So we're part of the civic group. Okay, government. We talked about SARS. We talked about Department of Labor and CIPC, and we almost gave a snapshot to say what is government is interested in when they are looking at your financial statements. The directors of the company are the preparers of the financial statements. And of course, you will be interested as a director to understand the needs of the users of financial statements. So if you are cooking your books, you must understand the level of destruction you are doing to the economy. Educational institutions and academic institutions, these schools and colleges, is where the talent is developed, and they may use our financial statements for teaching purposes, all right, teaching the principles that are needed for the preparation of financial statements and to run businesses effectively. The suppliers could be in the capital market or in the financial market, employees, lenders, and shareholders. Then we talked about suppliers at length, especially when we're talking about customers. Remember, we said when we're talking about customers, there's no customer without a supplier, and there's no supplier without a customer. Each of these exist intertwined. So we had customers, we had competition as well. All right. So we'll look at the traditional users of financial statement first, and we have considered this in this book. So as we go on, for instance, the next volume now that we're gonna deal with is volume 5, where we are we are giving you more in volume 5 about volume 7, okay, for you to understand more. Because remember, SPPSA is not only about people who are already in business. We are also in a situation where we want to inform, in fact, to guide those who want to come into business, into making sound business decisions, to say, is this something that I would really want to do? And if that is, what is it that I need to know beforehand? All right. So that is very, very important for us. So engagement strategies, benefits of community engagement. There are four of these. A business that actively engages with its community enjoys multiple benefits. Number one, customer loyalty. Number two, staff retention. Number three, local partnership. Number five, resource access. We've seen this with the faculty of belt and environment. All right. Excuse me. A business that on so number one, customer loyalty. Deeper connection leads to stronger brand loyalty and repeat business. Okay, so that's where that can be a starting point to create an internal generated goodwill which can be shown in your financial statements. Okay, so how people talk about you, people talking about nice, they praise you, they wish you can be here, they wish they can hear your voice, you've got a nice voice, and then all that. Okay. Staff retention. Employees prefer working for business with positive community impact. This is about association and reputational gearing. Okay, that's where you start to find yourself and you connect more into your internal generated goodwill. Okay, we remember we mentioned that staff members can do or break your business. So making good investment to staff members will lead you to a greater community connection. Okay, local partnership, access to collaborative opportunities with other local organizations. That is a simplified networking. Okay, so when you come, people are ready to accept and to hear your views. Resource access, that is about smooth operations, better connection to network funding and support systems. That is generally about respect and personal protection there. Engagement strategies, there are four of these. Okay, so when you employ, you must try to employ locally. I remember this was a huge issue at Sasolberg, where I think there were people who were employed from Sekukune to something like that. Okay, that's where we made a distinction between local foreigner and a foreigner. Okay, because the issue with Sasol, people, the residents, they were complaining that Sasol is not employing local people, is employing people from Eastern Cape, from Limpopo, from Western Cape. That is a local foreigner. Okay, and Sasol is also employing people from other countries. That is a foreigner. Okay, so we say here small businesses must try to hire locally, support community employment, and build local economic strength. Okay, collaborate. Okay, partner with schools, clinic, or community centers, or join initiatives. Okay, make an impact and generate your own business ambassadors. Okay, if we look and running campaigns, organize awareness events, train workshops, or sponsor local activities, which is another or an alternative way of advertising. Participate more, join municipality planning forums or local chamber of commerce. Visibility is not the same as existence. The purpose and the purpose of community development is what we're here to do at small businesses. This is because we small businesses are too distant. They like to distance themselves from the immediate localized activities. All right, you rarely find them there unless there is a need for them or they need something from these people. Yet we encourage a situation where even if you don't need anything, just be available. It might be that there's someone who needs something from you. Let us avoid thinking that when people need something from us, it's all about cash. Um, some people may want to help us more, and we just need to be present at that moment to find help. These strategies help business become integral parts of their community is rather than commercial entity. So I think now you can see the angle in which the community may look at the financial statements. For them, it's more about knowing your business, understanding it, and talking positively about your business as well. Okay. So community stakeholder map, different community groups have got different relationships with your business. Community group, there's the relationship, and that talks to the engagement strategy. Local residents, those the relationship type, they are normally customers and goodwill carriers. We've already talked about internally generated goodwill, and of course you may want to offer loyalty rewards there. Listening and respect is very essential in this community group. NGOs, NPCs, and NPOs, they are involved in social programs, collaborators. So the ultimate engagement strategy there is to partner in CSR campaigns. So schools and colleges, talent pipelines, training institutions. For instance, at Kunoka, we offer internships or monitoring programs. We produce excellent students here, all right? We pay too much attention on what the student should know after the student has met us. Government and council, regulation and enabling environment, attend public forums and consultations, especially the ones that are done by the public sector, because local government has got a very important role in the government sphere. Law abiding and responsible citizenry is what is important in this community group. Understanding these relationships helps businesses tailor their engagement approaches, but if you are not there, you won't know what to do. And it also helps them to pave successful pathways. Okay, so we looked at government stakeholders as an important community stakeholder. The book deals with this extensively, but what we found out is that, like any other users of financial statements, so I'm sure you have picked up now that in the community as a user of financial statements, you get a lot of different users of financial statements within the community. Okay, so which almost broadens the number of users of financial statements. Different government departments have varying interest in business operation. A full list of these is situated in our textbook, volume 7. If you take, for instance, these three departments, that is the agriculture, land reform, and rural development, these guys are interested in environmental compliance, land use and ownership, hygiene standards, and waste management practices. Then if you go to the Department of Labor, they are interested in labor relations, compliance, working conditions, employment equity, occupational safety, and health and safety. If you go to small business development, you will realize that these guys are interested on business performance, job creation, support of vulnerable groups, and access to financial services. Okay, so that's what that is all about. Understanding these interests help business prepare appropriate documentation and reporting. This proves that the business is aware about its position in the society and how to respond to a broader societal needs. So if you get these on time and you get the awareness about these on time, you can tell that you can do very well because you've got a better and a required understanding of what you must do. Case study, a butchery business. So if you are a butchery, how to take care of your community. Okay, so in this case we saw that this butchery, you are not allowed to take bones out of the butchery unless you request. Otherwise, that those bones are used for something else. Okay, sometimes these bones are used to the police station for feeding the police dogs. We're told supporting feeding scheme at school. I remember this butchery. There was a butchery that was feeding only one class. Only one class. I felt like that was creative because instead of worrying that ish, I might not afford to feed the whole school, you just say, okay, I'm gonna feed the grade R. Normally, it's normally one class. I'm gonna feed grade R, so I'm gonna provide drinks, food, butter, to the grade R. I'm gonna provide soup in winter, soup and bread only. So So we found that to be exceptional. Regulatory stakeholders, the Department of Agriculture, hygiene standards, water and sanitation, waste management, employment and labor, working conditions, health department, food safety, small business support programs. Okay, so if you want to access our material and to join our training courses and you don't have money, you can go to CEDA and there you tell them that you want to enroll with SPPSA because they've got a good program that will help you to survive in business. You can ask them to pay for you for our program. Okay, so it's not about you having money. CETA can also help you to do that. I know that I've also received calls from some of the departments and some of the municipalities appraising this program. So what those municipalities can do, they can recommend their service providers to say, look, there is this organization. They can help you with this. They can help you with this, and so forth. So those are the things that you will find here. So educational institution is a stakeholder. School business can support local schools through feeding schemes, student sponsorship, facility renovations, computer lab donations, and sport equipment. So these users, when they are looking at the financial statements, they want to see if you may be able to help them with specific needs. So as you can see from schools, these guys have got specific needs. But in the Eastern Cape and in some parts of Limpopo, Venda, KwaZulu Natal, you will realize that, and mostly in Northwest, you'll realize that schools there might be in need of more than one of these initiatives. Let us look at the universities. At the university, you will find that most of the guys that are coming from there, they are looking at your business as a potential to offer internship programs. They may use your business for case study research. They may ask you to go and teach at their universities because of the information that you have. They might use your product offering for their curriculum development, and they may use the financial statements for academic purposes because they want to clarify certain points to their students. These relationships create mutual value. Business gain talent while institution gain real world connection. So don't undermine these type of users of financial statements, but the key to that is that you must be able to produce accurate financial statements. The statements that are guided by the small business practitioners of South Africa. Environmental stakeholders, the key environmental considerations as one of the broader three considerations. Okay, so business must consider their environmental impact on the community. I think we talk about this when we talk on the car, the environment, because small businesses don't report on environment. So that is the thing of the past now in the small business environment, because SPPSA is putting an important emphasis on the reporting of environmental considerations. So businesses must consider their environmental impact on their community. Again, they must consider their waste management and disposal practices, how they use water and potential contamination, land use and proximity to the residential areas, compliance with environmental regulations, sustainability practices, and reporting are key environmental considerations that your small business must consider. Environmental responsibility builds community trust and ensures long-term sustainability. So now you can say that you've got more things to think about as you get into the small business environment, things that you were never told before. things that you probably thought they were never important, but because of your association with the small business and practitioners of South Africa, now your eyes are opening wider and wider as you listen to us, and you are becoming a different and exceptional small business practitioner. Different community stakeholders look at the financial information in the financial statements in many ways. A number of them are looking at the social impact, a number of them they are looking at local employment, a number of them they are looking at environmental investment, a number of them they are looking at educational support. Community members at social impact want to see how much of revenue goes back to the community development, because that's where the company operates and that's where the company is. On local employment, government departments track job creation and local economic contribution. Okay, but government is not very strong in in reporting that statistics. Environmental investment. Environmental stakeholders look for sustainability, spending, and compliance costs to say how frequent you adhere to your regulatory needs. Educational support, schools and universities track business contribution to educational initiatives. That is very, very important, that one. So please note these percentages represent the proportion of stakeholders interested in each metric, not actual spending allocation. So if you add all of these, they will not give you 100%. But if you look as per portion, you find that these percentages are real. Okay. So if we look on the leadership role, if we look on the leadership role in community engagement, you'll find that there are 5 items that you need to consider. One is vision, two is strategy, three is resource, four is implementation, and five is reporting. If we look on the vision, you'll find that it is important for your business to set community engagement goals. And number two, you must plan engagement activities. One of the things that we did at Kunoka was to associate ourselves with schools where we were able to go and do career exhibitions. So these principals will come to us and say, we're going to have a career exhibition. Can you come and talk more about accounting, about small businesses, taxation, and all those things? So we'll go there and talk about those things. And you will find that students are more excited to hear that. They are more excited to find that, in fact, the things that they are looking to find in life are much, much closer to them. So if you are looking on vision and strategy, you find that maybe if I may ask you a question to say, what is the difference between a goal and an initiative? That might help you to understand how to align your vision and how to align your business strategy, because now you've got information that is working well for you. Then you look at resources where you are allocating time and money and stuff. Okay, this shows care, because this money you could be using it to bring back to your business, buying more machinery, buying more equipment, buying more speed points, buying more this and that. All right, but because you are taking money to the community, it also shows that you are care, you care, you are available, and you are approachable. All right. Implementation, executing community program, visibility, delivering into your promise. Okay, so just work on your vision, your mission, and values. Reporting, this is about fact file and portfolio of evidence where you're documenting your impact and how you maintain transparency around your community. Okay, directors and management must understand that community engagement is a strategic business function, not just a charitable at all. It might it it might separate attention within it might need a separate attention within the organization. I'm sure by now you have seen a lot of instances where we are saying a separate attention is required. Where are you gonna get these skills that are gonna do this separate attention? So but it helps you to understand the growth avenues within the business, how far your business can grow. So it opens up your mind and your eyes into seeing a bigger picture of your business. Directors have a specific responsibility regarding community engagement and reporting. So there are four things that we may consider. These must be understood early when you are joining the business or when you are starting to operate. Financial reporting. The financial reporting ensures accurate and complete financial statements that reflect a community investment. Then there is compliance. That is when you meet regulatory requirements from various government departments. But do you know what those departments are and what their regulatory requirements are? Be transparent where you maintain clear record of community engagement activities and what impact you are making. Strategic direction, align community engagement with business objectives and values. Then that's how you're building your community brand. Okay. So if we go to the leadership structure, you'll find that it also gives you some form of imagination on how you can structure your business. Okay, this helps the community to know who to talk to within the organization if your business is really going into that direction. One, there is gonna be a managing director or the chief executive officer. This person oversees the strategy and operations of the business. This person has got a responsibility to balance the vision with the cash flow realities of the business. The financial director handles the budget and reporting, keeps books clean and investor ready. Then the operations manager ensures smooth day-to-day running, delivers customer promise, efficiency. HR, uh, those who lead people, manages hiring and staff development. The responsibility there is to build loyal and capable teams. Independent advisor may not necessarily be within the company, offers external expertise of government, adds objectivity and strategic insight for the business. So can you see now that this idea that you thought you want to do has got many more implications once you get into business. So your company is no longer about you, especially when it's about reporting, when it's time for reporting. There are a lot of things that you need to consider, and there are a lot of things that you need to know. And SPPSA is there to guide you. Even in small businesses, clear leadership roles help ensure community engagement in proper managed and reported. Even in small businesses, clear leadership roles help ensure community engagement is properly managed and reported. Can you see? It's not all about reporting money. You are also reporting your impact to the community, measuring community engagement success. Now you may want to report on four things here: customer loyalty, staff retention, cost reduction, and brand perception. Perhaps if we look on customer loyalty, we can see that the percentage of customers who cite community involvement as a reason for choosing your business, where customers are saying, we want to work with this company because this company brings back to us. Staff retention, improvement, customer loyalty for a business that tracks new and repeat sales. Okay. Um, so if we talk a little bit about customer loyalty, it is important when you are a small business to have a form. That form has a lot of information. That one of the questions it will ask, how did you know about us? That's where it tells you about your involvement in the community and the marketing strategies you employ. It might tell you about which marketing strategy works better than others and where resources must be channeled. Let us talk about staff retention, the improvement in the employee relationship rates due to community engagement programs. Okay, your employees are known to be good employees by the community and they enjoy protection because staff members feel good and they've got something to look for every day because they know that they're going to interact with the customer, with the community, not on basis of what they do in the firm, but on the basis of what the firm is doing for the community. cost reduction, decrease in certain operational costs through community engagement, where this will take into account free advertising as well, brand perception, increase in positive brand sentiment, community surveys, goodwill can be recognized in a financial statement if it's properly documented. Tracking these metrics help business quantify the return on their investment, but that needs an intelligent exercise. Um, I'm sure by now you are asking yourself, hey, I wonder where does this guy think we will get information to do this? Okay, so so it's a matter of sitting down and strategize and say, okay, I don't have money to get more resources. I don't have this to do that. But there is a pool of resources that is sitting somewhere. What is important about that pool? What does that pool really want? Do they want money or do they want experience? Do they want food or do they want money? They want shelter or they want blankets? So you find a way to navigate through the required skill. All right. I remember one of the medical doctors here. When he started, he needed an HR person because the practice was doing well and he was employing more staff members. But he needed someone who was going to look or was going to give attention to the staff members. Then, fortunately, his aunt was a retired HR practitioner who was bored at home, you know. So she used the aunt to be the HR manager, okay, and she paid 10,000 rand to do that job. You see, so there are skills that are there, but sometimes we're unable to access those skills. Let us look now at the final checklist and the next steps to take in the or within the community engagement platform. So have you mapped your local stakeholders? Who are they? Are your products or services improving community life? If not, why? Do you support local institutions like school, clinics, NGOs? If not, what is your next plan? Is there a feedback system that involves your community? If yes, that is good. Can it be improved? Is the community aware about it? Have you assessed the skills and gaps in your current leadership team? Do you have a leadership team at all? Are you only the leadership team? What are you doing with that? Are your managers trained in both technical and people skills? If not in people skills, your community will suffer. Do you benchmark your leadership against industry standard? If not, what are you waiting for? Is leadership succession part of your long-term plan? If not, your community will suffer, so as your business. Here are the key takeaways in this chapter. Strong business builds strong communities, and strong communities in turn support and sustain successful businesses. Businesses are not just get successful, there is a method of making the business successful. Strategic community involvement is not a public relations exercise. It is a business strategy that delivers long-term returns. If your business closed tomorrow, would your community notice it and care about that? Or it will be one of those transactions. All right. Oh, wow. That brings us to the end of this chapter. That is chapter 8. In this chapter, we dealt with two things. We dealt with the competition, that is chapter 7, and we dealt with chapter 8, members of the community. So the next time we meet in this volume, we'll be meeting in chapter 9, and in chapter 9, we'll be dealing with the directors of the company. Ladies and gentlemen, thank you so much. See you again this evening when we are dealing with chapter 9, the directors and management of the company. I'm hopeful that you learned one or two things in this chapter, and we're gonna finalize now with the directors and management of the company in our next session. Stay blessed.